Hi, I'm Gordon Coyle, and today I'm going to answer the question, what is coinsurance? On a commercial property policy, you may see the term coinsurance. It's usually expressed as a percentage next to your building, business personal property, or business income limits. What it does and why it's there is often puzzling to insureds. The purpose of coinsurance is to encourage a client to insure their property to its proper value. As an example, if your policy has an 80% coinsurance clause on your building, that means that your limit of insurance must equal at least 80% of the building's full replacement cost. If it's not, and you suffer a loss, you'll end up being a co-insurer and co-payer in that claim with your insurance company. Let's use an example to best understand how this works. Assume we're talking about a building that has a full replacement value of $1 million and it's partially damaged in a fire. The dollar amount of damages is $400,000. You insured the building for $500,000 in an effort to save on premium, and the policy has an 80% coinsurance clause. The basic formula for loss settlement procedures is to divide the amount of coverage you did have by the amount of coverage you should have had, and then multiply that factor times the loss. Here, you did have $500,000. You should have had at least $800,000 of coverage. That number represents the full value times the 80% coinsurance. When you do the math, that results in a 62.5% factor, which is multiplied by the $400,000 loss, which equals $250,000, which is the amount your insurance company is going to pay you, leaving you the remaining $150,000 to pay out of pocket to fully repair the building. Now you may be asking, what would happen in the event of a total loss? The building burns entirely to the ground. In most cases, coinsurance does not come into play, and you settle with your insurer for the sum you insured for. In this case, you'll get $500,000, less the deductible. But in this example, you're only getting half the money you need to rebuild your building, and it shows why having correct limits is important. You need to make sure that your limit of insurance, the coinsurance percentage, and the valuation clause in your policies are properly coordinated to avoid potential penalties at the time of loss. Underestimating the limits of coverage or getting the coinsurance wrong can cost you dearly at the time of a loss, which is when you can least afford a foul up. If you have other questions regarding coinsurance, commercial property coverages, or any other commercial insurance questions, please contact me. I'd be happy to help. Thanks for watching.